Mark Skousen 博士呢是最近被誉为全球最伟大的20位经济学家之一，他也是我们的老朋友了。他酷爱中国文化，我们曾经呢在佛罗里达 Money Show 上采访了他，那时他就曾经成功的预言了油价的反弹。那么这一次呢，我们想要问一问他，油价的反弹能够持久吗？同时呢，我们也是选了一些中美经济的热点问题，采访了他的意见。今天呢，我们也很荣幸的邀请到了我们的老朋友 Skousen 博士。Would you like to say hi to our audience?
Hello, how are you? Mark Skousen here in Las Vegas.
Well, Dr. Skousen, good to have you with us again. So last time I met you, you predicted the oil price had probably hit a bottom, and you were absolutely right. The oil market has been very strong during the past 3 months. But this morning, I read an article from Goldman Sachs. They said the oil price may have gotten a little bit ahead of itself. So now for my follow-up question, do you think the oil rally will last?
You know, I think we have seen the bottom in the oil price at $40 a barrel, and now it's at $60 a barrel, and it has moved up very fast. It probably needs to come back down a little bit to consolidate, like Goldman Sachs suggests. I don't know when that will happen, but I do think that we've seen the bottom in oil, and now's a good time to be buying oil stocks. We've been recommending oil stocks and making some money on them. So, with all the central banks inflating the money supply like crazy, quantitative easing and so forth, they're flooding the world with currencies. So the key is the dollar, of course, because the dollar is the world's currency. And so if the dollar weakens at all, then oil prices will move higher. But overall, commodities, I think, are close to bottoming out. Even gold looks like it's a decent investment at this point. So both gold and oil, I think, look positive right now.
Okay, good. Well, I'm glad you brought up currency. So over the weekend, we saw China's central bank. They decided to cut interest rate again.
Again,
This is the third time they decided to do it in the past 6 months. So why do you think the last 2 times were not enough?
Well, the economy is slowing in China, and China has to have a fast-growing economy to prop up all of the structural development that they have created. They've created all these cities. They have this building boom, and if you don't have people to move in, and if you don't keep the economy going, the whole system could collapse. There's a real danger in China that you will go through a unstable time period where the markets fall apart. Just like the United States, we had our 2007, 2009 financial crisis, and it was all because of an artificial boom in real estate and with artificial low interest rates. And China is trying to postpone that, and it's a struggle. So that's why they're doing it, because they fear that the boom will turn into a bust, and they're trying to postpone that from happening. I think it's a real dangerous time period.
Do you think China cutting interest rates will put some pressure on the Fed to slow down the interest rate hike?
I don't think the Federal Reserve is in any hurry to raise interest rates themselves, because if they raise interest rates, the dollar will be stronger, and oil prices may go back down again, and the economy may slow down, and they can't continue this recovery which they want to do. So I think they're holding off as long as they can before raising rates. Now, I would like to see them raise rates and get back to a more normal economy. And so 6% interest rates used to be a very common interest rate, especially for mortgages and long-term rates. But our long-term rates are 3%, maybe 4% for the mortgages. And so that's not a traditional rate of return. And so if you want to get back to normal rates, everything has to start moving back up. So I think the Federal Reserve is torn. We need to see a stronger economy. Here's my argument. Okay, here's my prediction. The Federal Reserve will not raise rates until the consumer price index goes up steadily higher. The CPI needs to move up more steadily. Bond traders look at the CPI more than any other indicator. And the CPI has been relatively flat, going up slightly. So I think they're looking for the increase. You need to have some kind of an increase in prices to avoid this fear of deflation. I don't fear deflation myself. I think deflation is a good thing. I like lower prices. But the Federal Reserve, Japan, the Bank of Japan, the Bank of China, the European Central Bank, they all fear deflation, and they're doing everything they can to keep it from happening. And so until the evidence shows that their inflation policies have worked with rising prices, need to have rising prices, and not just stock prices, and not just commodity prices, but consumer prices in general. We need to see those prices go up before the Federal Reserve raise rate. That's my prediction.
And then how about the bond markets? We noticed the rising bond yields has been a big concern for the stock market in the past 2 weeks. The global sell-off in the bond markets has actually pressured the stock market. I noticed the German market was lower 2% on Tuesday.
Yeah.
What do you think the specific reason is behind it?
Well, I think maybe it's the quantitative easing and the inflationary policies of low interest rates are starting to work. But they've done this before. We've seen it where the bond market has dropped sharply, but then it recovers because there's no continuation in the consumer price inflation. You have a blip up, but then it goes back down. So there's no evidence yet that we've seen the top in the bond market. I mean, I agree with Warren Buffett, who said at the 50th anniversary, you were there at their shareholder meeting, he and Charlie Munger felt that the bond market was not a great place to invest your money. The stock market is better. But like he said, if interest rates continue to stay low for 10 years, which is conceivable in this kind of deflationary environment, I don't think it's going to happen. He doesn't think it's going to happen. But if it does, stock prices are going to go a lot higher, and stocks are the place to be in rather than bonds. You know, we had a period of time where bonds rallied, stocks rallied. They grew together. But now we're going to see part two where they split apart, where bonds don't go anywhere. They may actually go down in price. While the stock market, as long as it's not a serious disruption, then I think the stock market could go substantially higher. It's selling right now at 18 times earnings, which is a little bit on the high side. There's no question about that. But if interest rates stay low for this long period of time, the stock market can move much higher.
What do you think about AIIB, Asian Infrastructure Investment Bank? You know, there were some disputes about whether or not the U.S. should join the AIIB. Eventually, the government decided not to. However, on the other side, U.S. closest allies like Germany, England, they were already on board. How do you think that's going to affect U.S. role in the future global economy?
I think the United States has to join together because the two superpowers that we're seeing develop, obviously the United States is the superpower, but China is the upcoming superpower. And they are flexing their muscles with their activities in the islands and again, Japan and Vietnam and all these, they're flexing their military muscle, and I think they're flexing their economic muscle, and the United States has to cooperate with them. I'll go back again to something Warren Buffett said at the 50th anniversary. He says these two have to work together. So I firmly believe the United States needs to join. the economic development there and work together. Otherwise, what could be worse than these two superpowers starting to fight each other? It could be very dangerous.
Hopefully the government will take your advice. So then I want to ask about, do you think the stock market is overvalued? And do you personally think the golden age of investing is over?
So the stock market has not had a correction, a serious correction of 20% or more in, 4 or 5 years. And it's due for a correction. I don't know what that event will be, but investors have to be ready for it. And like Steve Forbes says here at the Las Vegas Money Show, he said years ago, he says everyone's a disciplined long-term investor until the market goes down, and then everyone panics and you have an overreaction, so the market could really drop precipitously for no special, really heavy reason. And that is the concern, that I think it's inevitable. Capitalism, stock market is inherently volatile. So I don't know what that reason will be, but I expect it. Meanwhile, I'm 100% invested. I'm staying with dividend-paying stocks in quality companies, and I mentioned a number of them in my newsletter that have done well over the years. A lot of the emerging markets, stock markets, have done very well. India is a good example. Even China has had a pretty good stock market recently, but emerging markets may be a better place to be rather than just the U.S. market, which is at near an all-time high.
At your speech, you mentioned high quality, high yield, and growth of yield stocks. You mentioned this specific one, mainstream capital. So why did you pick this one? Can you explain?
Yeah, Main Street Capital is a business development company that finances private companies. So they loan money and they invest in and get equity position in private companies. They tend to focus on family-owned businesses who want to expand, who need to introduce new products. They've had the doors close on them from the banks because the banks are more interested in investing in safe treasuries. So this is a great opportunity for BDCs, business development companies like Main Street Capital. And Main Street Capital is considered the best of the breed. And so it pays a nice monthly dividend. It pays an extra dividend twice a year. I mean, name me another company that does that. The yield together is over 8%, and it's got a rising dividend policy. It has an explicit dividend rising policy. So I like that a lot. In the energy field, I like Enterprise Products Partners. Symbol is EPD. It's been increasing its dividend every quarter now since like 7 or 8 years. So it's yielding 4.4%. A pipeline company based in Houston. Another company based in Houston. We recommended Main Street. That's from Houston. And now Enterprise Products based in Houston. I like Houston a lot. A lot of good companies there. So that's a rising dividend policy too. And you look, it was up 15% last year. It's down a little bit this year, but I'm sure it'll recover with the other energy stocks.
Good. Thank you. It's always fun to have you with us.
My pleasure. All right. Thank you.